Yo, what's up, you guys? Welcome back to another video. So some crazy stuff has been happening in the market that has obviously served the buyers of the market based off the last time that I had this conversation. So I'm going to give you guys an update based off a technical as well as a fundamental perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you do enjoy the content, please do consider smashing that thumbs up button. Also, I will, however, advise you to head over to the educational section on the channel. If you are new to the market and you want to learn about what news are and what all of that stuff are, you'll find all of that information in here also. Now, the market had obviously sifted the bias based off the last time that we spoke, and I'm also going to answer some of the questions that we received over here. But before we get there, we are going to go through this article from CNBC. It says here gold dips as dollar firms in run up to US inflation test. Now, we obviously learned on Friday when the unemployment rate dropped, we saw that the price of the dollar index started to move to the downside, especially on Tuesday. If you look at the price action over here, this is on a 1 hour time frame. We obviously saw the market took a massive dip to the downside, and we obviously expected the market to fill in that liquidity, which is exactly what it has done. But the market is now faced with new structure and new fundamental information. What I mean by that basically is that we first learned on Friday that the unemployment rate dropped. That then hesitated investors that the Feds are more likely to hike the interest rates, and because of the less interest in hiking these interest rates, obviously expecting a weaker dollar, and that is not what happened. The price has now filled up all the way to the top, and I do still expect a correction on the index. However, new developments is now suggesting otherwise. But keep in mind, we do have the CPI report coming through on Thursday that's going to give us a further indication there as well. It says your gold dips as dollar firms in the run up to US inflation test, and that report is expected to be delivered on Thursday, which is a CPI report. It's called the Consumer Spending Index. It's a report that is used to measure inflation for the index. It says here gold edged lower on Tuesday as the dollar climbed after weaker Chinese trade data, while caution in the run-up to US inflation reading this week also kept appetite for zero-yield bullion subdued. It says here China's weak trade data has resulted in a general risk of sentiment. The haven of choice today has been the greenback, which has put pressure on the precious metal, said FXCM market specialist Russell Shaw. Now, you guys must now again, this is why I say you always have to be reactive and not predictive, and you need to maneuver and you need to move as the market goes, purely based off the fundamental information and the market structure there as well. Now, we obviously didn't know that this was going to happen on Friday when they also told us that the Feds are now less likely to hike the interest rates, and because of this we obviously had a bearish outlook for the index. Now, because the Chinese, like they say, the Chinese weak trade data also help the dollar because it is also considered a safe haven, and if they're not doing too well, then that obviously means more money flowing through the dollar index, this then strongering the index, and this obviously weakening gold there as well. Moving over to the stock market, it says here Dow was down 300 points because of bank shares under pressure from Moody's downgrade live updates. It says here stock retreated Tuesday as a decline in the bank shares dampened investors' sentiment. The Dow Jones was down 0.7%, the S&P also 0.7%, and the NASDAQ was up 0.8%. But that's obviously because the NASDAQ is more focused on tech companies and not as the industrial services there as well. It says your banks fell broadly after Moody downgraded the credit rating on several banks, including M&T Bank and Pinnacle Finance. The credit agency also placed Bank of New York Mellon and State Street on review for a downgrade. Now, this is obviously all of the information pointing to why we are seeing such an aggressive bullish movement in the dollar, but I do still anticipate a correction to take place in the market as we are faced with new structure here once again. Now, keep in mind that obviously this will all be based off the CPI reading that we obviously expect the market to pull through this week. So we're obviously going to see what happens when the CPI data gets released. If we go here, we'll see over here. There we go. So we got the CPI coming through, and that will be a key indicator for us to determine whether or not we are going to expect a deeper retracement on the index, or whether the index are going to continue this move to the upside there as well. So first question from Nelson is saying Euro AUD, GBP AUD, Euro JPY. I'm not sure. I'm not sure what you're asking. I think you're asking me to break down these pairs for you. So you have to be more specific in what you're asking, because I don't know. But we can start with what do we have here? Euro AUD. I think all of these things are way overbought. Yeah, these are quite high prices. So if you go here on the weekly time frame, the market's obviously sitting at very premium price here at the top. This is obviously a level of resistance. The market had obviously recently broken above this level of resistance, and it's back to test it for the first time. Now once resistance gets broken, it obviously becomes support. If we do expect a continuation, we obviously expect a pullback first, and that pullback will be back to the previous level of resistance that is now acting as the level of correct support. Now here on the daily time frame, we obviously need a clear confirmation of this daily candle to close below this wick that we have here in the market. Right now, it would be very important to see, it will be key to see where this candle closes. If this candle is capable of closing below this level, then we can definitely expect a pullback further down first, and then potentially a continuation to the upside. You can see this market has been very bullish, but I would say take it with a grain of salt, because you don't want to sell into a bullish market. The best places to sell a market like this is to wait for the market to come back, break below this area, and then on that retest you want to sell, because you want to sell at these prices where the market is trading in bearish territory. So for now, I'd probably tell you to just sit on your hands, monitor the price action, and see what happens. If the market does close below this level, then I would suggest you just wait for a pullback and then run that move to the downside there. Also, the price action would probably be similar to GBP AUD because of the positive correlation. Yeah, so here you got the same thing. If you go on the daily time frame, excuse me, the weekly time frame, you got a market testing a previous resistance for the second time, or sorry, for the first time actually since it's been created. Now basically from here we can see that this level over here was a very important structural level that the market had broken through also right there. So a pullback is obviously expected. It's deemed to be expected because that's how the market moves. It's just a matter of when, and the best places to look for these pullbacks is obviously at bearish territory. For now, I would probably suggest that you could potentially, if you do want to get into this market, there is a short-term selling opportunity taking place over there. But if you're looking to ride the big wave to the downside, I'd wait for a clear break below this level. In doing so, would the market then print what's known as a head and shoulders pattern. This is considered a bearish pattern from a technical perspective. Next up, we've got Euro JPY and Euro JPY over here. So the price action quite very difficult, not very difficult to read, but we basically got a market that we need to basically wait. We need to wait for a clear break. However, you know, I see this market is basically leaning more towards the downside. But I'd say again, if you've been on the channel long enough, you'd know there's only two ways to trade these consolidation phases. Is to wait for a clear break above or below this structural level, and then you can ride the wave either up or down. And the same would go for GBP JPY, because I would assume that the correlation is very high. Yeah, so we got the kind of the same price action. We got here, if you just look left here, you can see this was a very important level. So here that the market had created, and then we obviously have this level over here. Again, I'm more likely to see this market go lower until there, but again, wait for a clear break. That's the best thing to do. You'll have a better opportunity to trade. If you want to maybe get in there, you can get in there, but it's important that you apply the rules of the strategy that you use. Guys, that is it from my side. Today is Tuesday. I'll give you guys another update on Thursday once I get the CPI data. But for now, I would say hold on to your horses, wait for the index, wait for the CPI data to be released first before making any trading decisions. The market is waiting for that data to be released first. That is it from my side. Thank you for your time, and as always, cheers for the ears.